Bank always looks at where the pricing of its products relative to competition. Obviously, for a bank, what it wants to do is manage its cost of funds, and now, given the removal of the floor, there may be some pricing changes within some of the savings products to reflect the liquidity. The other challenge is we have to remember that banks mobilize savings or mobilize deposits to on-lend them, and if you look at the growth of lending in the market, it has been quite subdued because of the rate cap that still remains. Yeah. So if you've got a situation whereby you're taking excess deposits, you can't lend them. The only other option is to put them in government securities. Now, if everyone is competing for those government securities, you're left with surplus deposits that are actually not earning you anything. So I think that's probably why you're seeing banks necessarily respond by adjusting their rates. So we can't operate in isolation, and we do review our rates from time to time. But at the same time, with products like our Zidisha product, savings product, it probably offers the most competitive rates of any bank in this market as we speak. And the beauty of that product is it allows a very small person with small savings to be able to get the highest rates as compared to even somebody who has tens or hundreds of millions of shillings to invest. And that's what we want. We want to encourage a savings culture, so that people can take that money and at some point even invest in the securities market, yeah, like we heard earlier this morning. As we migrate with the transition, obviously there'll be some costs that will be obvious, like, as you say, the physical rebranding is going to cost us money, which is not a business as usual cost. What we'll be doing as we release our financial statements, especially towards the end of the year, in our financial report for 2018, which will be released obviously in 2019 and then subsequent years, is we will give a breakdown of what costs we have spent for the transition process. And what we're trying to do is to make sure that we shield minority shareholders from the transition cost, so they don't feel that cost coming through to them and impacting their dividend. Yeah. So we need to look at the investment as twofold. Yes, you've got the rebranding. That in itself doesn't confer immediate financial advantage. But then some of the changes, like if we're migrating to better systems, that will give us more functionality, which will allow us to have a better customer offering. That kind of thing is actually a positive, even though it might be an expenditure. So I think we'll wait for us to be able to share those numbers, and we're going to be quite transparent around what it is actually costing and what investments we've made.
I think, just to correct you, that's Kennel and not Total. So what's come out today is that there's an intention to take over. They have not indicated that they are delisting, so we would not be able to say that. I think it's more around the key shareholders thinking around taking over the company 100%. Our every desire is to have them remain listed, but I think these are normal dynamics in any market. I don't think it has anything to say around the structure of the market. I think the market is attractive. They think there's value in that company. They would like to increase their stake in that company, and then that's the perspective we have taken. Having said that, I think it's around what are we doing to encourage more listings. Now, we are working on various things. We are working on, first of all, on creating an incubator program, an incubator board that will very soon be launching, and this is primarily to allow companies to be hosted on the exchange, and that hosting platform will basically provide them with ability to understand the capital markets, go through a journey from understanding the various aspects of the capital markets, the capital valuation, how do you value companies, why is it good to list for you, what does it do to your brand, and that happens as a pre-IPO sort of journey. And is to make them comfortable with the market and eventually be able to then decide which form of capital they want to raise. Is it equity, is it debt? And we believe that pipeline will then be healthy to encourage us to have more listings in the future. So we are not, we would like to encourage, we would not like to see the listings, especially good companies, but we would like to see more and more companies taking advantage of the market. And we're getting very good feedback on this program that we are about to launch. That question, I think we do have one licensed foreign exchange platform that's currently licensed by the CMA, and I believe they've commenced operations. And I think that's the direction we want to take. All trading taking place on any asset, be it forex, be it should actually be on exchange, and I think that's the direction and the reason why that license is in place. So that is really what I can comment on that. Derivatives market, as I mentioned in the plenary, we are doing a pilot phase using live cash right now in a controlled environment. And that will then inform the exact date that we'll be launching the formal market. We, without giving a definite time, I think we are making every effort to see if we can do this in the first quarter, owing to the fact that we're seeing very good results. So I would like to say that we'll do all our best to ensure that at least within the first quarter we should be able to get the market out.
So
information probably is that it's going to be issued during the government's calendar year. So we're within the calendar year. It was not going to be the actual calendar year. So